just want to cry. You can't make human connection. You can't hold their babies.
Wow, according to this golden ratio multiplier data here, over the last 10 years, it's showing Bitcoin clearly likely has bottomed here and it is going to be heading up. However, traditional technical analysis is showing something a little bit different. As well, the 200-week moving average heat map showing the same thing as this golden ratio multiplier. However, what is the TA showing? For patterns like this, technically still on the board, what does this mean for other on-chain analytics like the two charts we just showed you? We'll get into that in this video. And as well, we'll discuss the likely time frame that this will break out and exactly where it will break out if it does. Wow, this type of symmetrical pattern actually tends to break up or down at the same rate. However, this longer time frame ascending triangle tends to break up over 70% of the time and down only 30% of the time. So we'll get into breakout targets to the up and downside of this smaller symmetrical triangle within this ascending triangle, and then we will show you some more data. And as well, Bitcoin continuing to get a bounce at the key level that we've been mentioning, guys. Absolutely spot on, love to see it. But more specifically, there's only around 24 hours until we get a weekly candle close. And if we close exactly where we currently are, what does that mean for the market? I'll give you a hint. It's pretty gooey. Wow, let's do this. Wow, what's going on, everyone? Welcome back to another extremely webisode. We have so much to get into with Bitcoin's charts, but in addition to our traditional TA, we're going to be incorporating these two other very interesting charts. And guys, we're going to start incorporating more and more data like this over the next, forever, because guys, it's just absolutely important to have a nice mixture of not only the fundamentals, not only the news, not only the technical analysis, but also some of this on-chain data and specifically some of these analytics, which are just very interesting. For example, one of these analytics that we're not going to use today, but we used last week, and we find very interesting, is how long a Bitcoin address has been sitting, how long that wallet hasn't moved, because that does have a correlation to these bull and bear markets. They are very interconnected. Every little piece of data can become significant if it's looked at in a correct way and over a long enough period of time. Wow, guys, so much to get into. If you're new to the channel, make sure to leave your comments, subscribe, turn on the ding-a-lings, and we can get ready to give that ledger away. Had a lot of winners over the last few weeks, guys. Very interesting stuff. But as well, before we get into the webisode, guys, we do have all of our charts playing out live here as well on T4. And we do have about another week or two before our final sale on T4 version 3 is over. So make sure to check out the link pinned in the comments and description if you're interested in that. And as well, if you want a new place to buy cryptocurrencies, check out crypto.com. Link is in the description and comments. And if you use that link, sign up and stake 50 MCO, we both get $50 free of MCO. That's pretty cool. Wow, so guys, we're gonna be talking about this chart here and this chart here. So, and as well as our technical analysis. So we're gonna start off with this one and we're gonna go into some TA, and then specifically, I really wanna get into this because this specific thing has happened in the past before, but what happened during this last bull market turned into a bear market hasn't happened in the last 10 years, which is pretty wild. So let's start off here. Basically what this chart shows, it's a 200-week moving average heat map. So when it's dark blue like this, when it's dark blue purplish, historically those have been the absolute best times to buy Bitcoin. And as you can see here, you can see this is the scale. Let me move my face camera here so you can see this is the scale here. And then this is the top. This is the worst time to buy. So, I mean, obviously, this correlates. The very top of the market, red, worst time to buy. Top of the market, red, worst time to buy. Now, guys, we have been in this blue area for a very significant amount of time, actually, since the end of 2018. Pretty significant, but you can see in the past as well, usually those times are pretty significant. They do go on for a fairly substantial amount of time. But what you notice about this time is we've been in the dark blue, even purplish, for a pretty long time. As you see here back in 2015, 16, and going into 17, it started off pretty, really dark purple, and then just slowly, lightly evened up and got really a little bit lighter into blue and then turned green. It was a very gradual purple to light blue. This time we went light blue to purple to very light blue to a little darker blue back down to pretty much purple, and now we're still currently kind of purple, which indicates, according to this heat map, that it's one of the best times to buy Bitcoin. Now, is it actually the best time to buy Bitcoin? I think that's definitely up for interpretation. In my opinion, I will say this, not financial advice, but I personally have been accumulating Bitcoin and altcoins over the past few months. So that was the one chart we want to look at. That one's interesting, but again, I find this one more interesting. Now, before we get into that though, I want to go over a lot of this basic TA so we can get a nice basis for what we're going to get into. So guys, first things first, on this chart here, weekly chart on Bitstamp, one thing you notice is that currently we are testing basically exactly where the candle opened up back on June 1st. So our last weekly candle where it opened up last about almost 2 weeks ago. And actually 10 seconds after I said that, we dropped a little bit below that. So again, we're still kind of fighting this area. Where that closed was exactly around like the $9,400 level. With this candle closing, again, we still have, as I'm recording this, we have about 32 hours until we get our weekly close. Okay, so we have over 24 hours. If we get a close, let's assume that it's going to close exactly where it is right now, just for the sake of analyzing that. If it actually close exactly where it is right now, historically on this weekly chart, again, that's kind of a neutral close. It's not really, it's definitely not good, but it's also not necessarily bad. We want to get a close substantially in this golden pocket here, which is between the 0.68 and the 0.65, the area we've been failing to break through for, I mean, really ever since the last few months of 2019, we failed over and over again to stay inside of and not get immediately rejected at the top like we did back in February. But overall, guys, on the weekly charts, I definitely think a more substantial level that we would want to hold is that $8,700 to $8,800 level. This is exactly where the 50-week moving average is, and even slightly below that, which is our bigger pullback area around 82 or 83, is where that 21-week moving average is, which is much more important in my opinion. Overall, this box is incredibly important. So honestly, even if we saw a dump over the next few days down to this area, that would be completely fine with me. Because we've been trading sideways for so long, we're going to be getting a move out of this at some point. The breakouts have been so small lately, it's been pretty tedious. On the weekly chart, not much to really note in terms of this close. It's not going to be pretty substantial, even if this does look pretty engulfing. The body engulfs the previous body there. But again, we saw that a few weeks ago where we had this nice giant green body. The following week was the exact opposite, the exact same size body that closed exactly where that previous one opened, right here on this 50-day moving average. And then the following week after that, you know, this could have been seen as a bearish reversal sign, but instead it just bounced right on that 50-day moving average. And again, we're still kind of just stuck in between this 50-day moving average and this golden pocket. So basically between 8,700 and 9,700. Okay, that's been the story for like the last almost 2 months. Between 9,700 and 8,700, Bitcoin has been stuck in between. So weekly, not really too crucial right now. This chart, this is more important, I think. This is on the daily, but this blue line is much more important. It goes back 7 years. That's where we initially got the head on the inverse head and shoulders back in December of 2019. And then as well, we fell through it a few times as we, after we were trying to recover after that massive crash on March 12th. And now we're above it again. But yeah, we'll have to see if this holds. As long as we hold above 8,800, which is right about this green line, then I'm pretty bullish here. This is what we need to break to confirm a shorter term reversal. If we break 8,800, if we break this green line, guys, then I think we're specifically going down to about 81 or 8,200 guaranteed. And then over, maybe a week after that, I definitely think we could end up going in to the mid 7,000s. And ultimately, if that would happen, I would 100% think that that would be the final dip before we really, continuously move up. And that's where this other chart is going to come into play of this golden ratio chart that I'm going to be pulling up in a few minutes here. Additionally, what that would look like on this chart, if we break 8,800, come down to that 82, like I just said, and then as well, if we fall down to the mid 77,000, so let's say 76, 75, 7,400, right about this area, this would be far enough down, in my opinion, to complete this inverse head and shoulders on this much longer time frame. So if we did get a substantial pullback, let's say to about here, that would validate this. It would be, in my opinion, a very, very attractive inverse head and shoulders here. Be something like this, okay? With inverse head and shoulders, we don't have to get, what was this, down to 6,400? We don't need to come down to 6,400 exactly for this to be an inverse head and shoulders, okay? It's not like that at all. So a move like this, and specifically with every other moving average and indicator, I definitely think this would be the area of a pullback. I think this would be the right shoulder right about here. So it would look something like this. And then if we did that, came back to 10.4 and then blasted off there, guys, it would be absolutely guaranteed, in my opinion, if that scenario played out to where we did this, a pullback to 74 and then back to 10.4 and broke that, 100% I think we would blast through 14,000 US dollars and within days go up to test the $20,000 all-time high resistance level. That's exactly a pattern that I think would have more than enough momentum to shatter a lot of this resistance we've been facing. So that's that scenario. And then if we switch over to this final pattern, ascending triangle, which again, guys, these tend to break up about 70% of the time and they break down 30% of the time. So they're more likely to break up. And currently what we're facing though is different. We have to take into account all of the technicals, and this green line is the last 2.5 years of resistance. So again, a substantial level. After we broke below it, we found support on the bottom of this ascending triangle here, but we obviously found resistance right at this 2.5 year resistance. So this is the pattern that's in play right now. And I think that we're going to get a breakout probably before June 16th, which would put us right about here. So again, this could give us a few days to trade in here. And if that does, then I definitely think it's likely we could come up. The breakout target of this, we take it from longest point here, would put us basically almost up to the top. I didn't measure this perfectly, so it'll be a little bit bigger, but almost up to that $10,000 level. And to the downside, guys, this is interesting. To the downside, it would put us to our exact target of about 9,000, which even if we broke down out of this, guys, there is plenty of scenarios where this could still end up breaking up very massively within the next few weeks. Because 9,000 is a very strong level, and it doesn't even take us all the way down to that $8,800 level, which I think if we get to, we're headed a lot lower over the short term. But then, mid to long term, it's a much more bullish pattern. Wow, and now in the meat and tomatoes of the video, the golden ratio multiplier. So what this is really interesting. So the one thing I want to point out is this orange line right here is the 350-day moving average. Now, if we go back to November or back to 2011, when we initially broke through this moving average, we came up. Each one of these times, by the way, I want to point out, we fell below the 350-day moving average, and we got resistance initially before breaking up. Okay, so the first time, but then mainly the main thing I want to show here is that when we broke below the 350-day moving average and came up to this green 1.6 accumulation high line and this red low bull high line, okay, so this green and red line right here, when we came back up to those lines after breaking back above the 350-day moving average, then we went on to set new all-time highs. We did it here back in 2012 and 2013. Okay, and then when we fell below this and then broke the 350-day again, yet again, we found initial resistance right at that red line, but after we broke that orange, we went on to set all-time highs. Now, what's interesting is that happened the last two times back in 2012, 2013, and then again 2016, 2017. However, this time, we broke the 350-day moving average right here, this orange line, and when we came back above it, we did exactly what we did the last two times where we found a resistance at this red line. However, instead of going on to set new all-time highs shortly after that, we got rejected and actually got pushed back ultimately down below this 350-day moving average line. So that's the first time that's ever happened on this chart where we go below this orange line and then we break above it to the red line. We have always set new all-time highs after it, except this time. This time we went to that red line. And instead of going on to new all-time highs, we ended up going below that 350-day moving average line again. So guys, in my opinion, what does that mean? If things are anywhere similar to the last 10 years of Bitcoin's price, what that means is that this thing is coiled and spring-loaded, okay? We talk about all the tension on just these regular technical analysis charts, but there's tension on these other charts as well. There is tension. I definitely think an explosive move is setting up, you guys. Bitcoin has been beaten down very substantially over the last few years. We had an insane bull market in 2017 that ended in 2018, and we've had an insane correction, insane bear market since then. And I think based on all of this data, we have more than basically paid our dues in terms of what we had to do in a bear market because we had such a crazy bull run. Naturally, we probably needed a very crazy bear market, and we definitely got that. So that's definitely my take on that, guys. Let me know if you think about this. I'll leave a link to these in the description if you guys want to check out these charts and mess around with it. Very interesting stuff. As well, make sure to leave your comment for the ledger. Guys, check out T4. We still have that sale going on, the last sale of version 3, and you can access the charts there as well. And make sure to sign up to crypto.com if you're interested in finding another way to get some cryptocurrencies. Wow, thanks guys so much. I'll see you in the next one. Peace.